Hey everyone, and welcome. As an analyst here at TalkTickers, I want to talk about one of the most significant economic shifts happening right now. We're seeing what looks like a massive reallocation of capital, a hard asset renaissance that is really starting to reshape the entire global financial landscape.
And this all just exploded into view when gold didn't just break records, it absolutely shattered the $5,000 per ounce ceiling. Now, this wasn't just another market headline. It was a huge signal that something fundamental has changed.
So that brings us to the big question we're tackling today, right? Are we just witnessing a short-term speculative fever dream? Or is this the very beginning of a multi-decade trend, a brand new commodity supercycle? Okay, so before we go any further, let's make sure we're all on the same page. The term supercycle gets tossed around a lot. So what are we actually talking about here? Yeah, see, a super cycle isn't your average up and down business cycle. We're talking about these huge, deep, long-term economic waves that can last for, 20 or even 30 years. They aren't kicked off by minor market jitters. No, they're driven by profound structural shifts in the global economy. Think about something as vague as an industrial revolution or a whole new economic superpower coming online. And this is where it gets really interesting, because when you look at history, you see these cycles are tied to massive world-altering events. The first one, fueled by the industrialization of the United States. The next came from rebuilding Europe and Japan after World War II. And the last one, which many of you will remember, was all about China's incredible industrial boom. So, the fourth? Well, a lot of evidence suggests it's kicking off right now, driven by the global energy transition. Okay, so that brings us right up to the present day. Let's really dig into the argument for why so many people believe we're in the opening act of a new cycle, right here, right now. And it's not just one thing. It's more like a perfect storm of factors all converging at once.
You can really boil it down to three core drivers, creating what looks like a major structural imbalance. First, you've got decarbonation. Some are calling it greenflation, where building out all this green tech requires just unbelievable amounts of raw materials. Second, for the past decade, we've seen chronic underinvestment in new mines and oil projects, so supply just can't respond quickly. And third, you have this whole backdrop of geopolitical tension, fragmenting supply chains, soaring government debt, and it's pushing investors toward the safety of tangible, physical assets.
And look, to really wrap your head around the scale of that first driver, this visual says it all. I mean, just look at the mineral intensity. An electric vehicle needs roughly 5 times the amount of key metals, we're talking copper, lithium, cobalt, as a regular car. A single offshore wind farm needs tons and tons of copper. This is not just a marginal increase in demand, it is a fundamental step change. So, with that big picture in mind, let's zoom in on the specific markets that are really leading the charge at this moment: gold, silver, and copper. Gold has obviously been the trailblazer here. After blowing past $5,000, the forecasts are getting even bolder. We're seeing major analysts at firms like JP Morgan and UBS revising their year-end targets, with some now targeting a range as high as $6,200 an ounce. Just incredible. But here is the absolutely crucial thing to understand about this gold rally. It is not about global growth. This is what the market is calling a debasement trade. With government debt, like in the US, spiraling past $36 trillion, central banks and big investors are buying gold as a hedge. It's a safe haven against the fear that traditional government-backed currencies are losing their purchasing power. All right, now let's talk about silver. For years, it was kind of seen as gold's less glamorous cousin, but wow, that has changed in a big way. I think this quote just captures this shift perfectly. Silver has gone from just a precious metal to a strategic asset. And here's why. It's getting hit by a strategic squeeze. Demand is exploding from 3 of the biggest technological shifts happening today: solar panels, electric vehicles, and the hardware for AI. This has pushed the market into a structural supply deficit for 5 years running. And to top it all off, governments are now officially recognizing its importance. The US has designated silver a critical mineral, which means strategic stockpiling is now on the table. And finally, let's shift to the backbone of the energy transition: copper. Its price action has been just as stunning. You're seeing forecasts, like this one from Citigroup, that suggest copper could approach an incredible $15,000 per ton this year, as all those supply constraints really start to bite.
You know, we used to call it Dr. Copper because its price was such a great indicator of global economic health, but now its surge reflects something much more fundamental. With a projected supply deficit of over 300,000 tons this year alone, copper's price is no longer just about economic growth, it's about a structural shortage driven by the demands of this green revolution.
Of course, no market moves in a straight line forever. So as we look at the rest of 2026, it's really important to look at both the bull case for this rally continuing and the bear case, which highlights some very real risks out there. The bull case is pretty clear. Green spending keeps going, geopolitical risk keeps pushing investors toward hard assets, and supply just can't catch up. But the risks are significant. Any real slowdown in China, the world's biggest consumer, could hit demand hard. You have to admit, a lot of this rally is speculative, which means it could be vulnerable to a sharp correction. And finally, you can never discount innovation. High prices are the best incentive to find substitutes for expensive metals like copper. So, what's the bottom line here? It's that regardless of the short-term volatility, the evidence suggests this isn't just a market blip. We could be witnessing a major realignment of global capital. This hard asset renaissance seems to be driven by the powerful, long-term forces of global decarbonization and concerns over massive sovereign debt. And that leaves us with a final, provocative question. This isn't just about investment portfolios. If this cycle continues, are we prepared for a sustained era of greenflation? A period where the very necessary and noble goal of building a sustainable future structurally drives up the cost of nearly everything else in our economy? It's something we'll all need to be watching very closely. As always, this content is for informational purposes only. This is not financial advice.